All right, let's get right into it. Today, we're trying to solve a puzzle that has confused so many traders and cost people a ton of money. What really moves the price of Bitcoin? Because it seems to break all the normal rules of the market. So, let's start by asking the one question that I'm sure anyone who's tried to trade Bitcoin has screamed at their screen at some point. Why is this so incredibly hard, and why does it feel more like a casino than an investment? To really get to the bottom of this, we're going to start with a story. It's a cautionary tale, really, and it perfectly highlights the trap that so many people fall into. So this story is about a trader who, honestly, should have known better. He was experienced, he was confident, and he really thought he had this whole Bitcoin thing figured out. Well, spoiler alert, he was wrong. The market didn't just humble him. It taught him the exact same brutal lesson twice in a row. And the scale of this failure is just staggering. On his very first attempt to make a big trade, this guy lost $7 million. Just like that. Poof, gone. And this is what's so wild, and it really shows you the nature of this market. After that huge loss, you'd think he'd step back, right? Nope. He thought he saw another perfect opportunity, so he jumped back in, only to get completely wiped out a second time. 2 attempts, 2 total liquidations. So what is going on here? How does an experienced trader get it so incredibly wrong? Well, the reason is that the tools, the strategies, the whole playbook that works in the stock market, it's pretty much useless when you're talking about Bitcoin. Here's the key difference. In traditional markets, traders look at charts for patterns, right? That's technical analysis. Or they dig into a company's financial health. That's fundamental analysis. But Bitcoin just doesn't care about any of that. Its price isn't moved by earnings reports or historical trends. It's driven by something way more basic, the flow of money and just how easy it is to manipulate. And this leads us to the real reason why that analysis fails. See, you're not playing on a level field. You're swimming in a playground for giants. And these giants, they've got a name: whales. These aren't just some myth. They are very real investors or institutions that got in early and bought up huge amounts of Bitcoin. They hold so much that their actions alone can literally steer the entire market. The source material gives us a perfect way to think about this. Picture the entire Bitcoin market as a small pond. Now compare that to the Nasdaq stock market, which is like a vast ocean. If a whale decides to sell, say, $5 billion worth of Bitcoin, it would create a tidal wave that could crash the whole pond. But if someone sold $5 billion on the Nasdaq, it would be like a tiny fish making a splash. Nobody would even notice. And this is exactly where the trap closes. As a small trader, you set stop-loss orders to protect yourself from big losses, right? That's the smart thing to do. But when a whale makes a big move, the wave they create is almost designed to hit those exact price points, triggering a flood of automatic selling that liquidates your position and makes the price drop even faster. You just become collateral damage. Okay, so if technical analysis is useless and whales can just move the market whenever they want, what is the one thing that actually predicts where Bitcoin is going long term? What's the real force at play here? The answer is one single word: liquidity. Forget the charts, forget the daily noise. Liquidity is just the amount of money flowing through the global financial system. When there's a lot of money looking for a place to go, risky assets like tech stocks and, Bitcoin tend to shoot up. When that money dries up, they tend to fall. It's that simple. And you can actually see this chain reaction pretty clearly. It all starts with big macroeconomic policy, usually from places like the US Federal Reserve. When they make it easier to get money, increasing liquidity, the big stock markets, like the S&P 500, usually go up first. And Bitcoin, more often than not, just follows that bigger trend. It's really a macro asset. So, knowing all this, knowing you can't predict the short-term moves and that the game is basically rigged by whales, how can you possibly get involved with Bitcoin without getting burned? Well, the answer is to stop playing their game and start playing a totally different one. Let's just break down the two mindsets. On one side, you have the trader. They're trying to time the market, using analysis that doesn't work, and basically gambling against whales who have way more power. On the other side, you have the investor. They believe in the long-term potential of the project, they ignore all the daily chaos, and they just buy and hold, patiently. So after all this complexity, all this talk of whales and liquidity, the source material boils it all down to one simple, really powerful piece of advice for anyone who believes in Bitcoin's future. Buy it on spot and leave it. And what that means in practice is pretty simple. Buy the actual asset. No complicated stuff, no leverage that can get you liquidated. You buy it, you own it, and then you just hold on to it, riding out the storms with the belief that its long-term value is what matters. It's a strategy that's all about patience, not prediction. And there is some good news on the horizon for this patient approach. We're seeing major institutions, even entire countries, starting to adopt Bitcoin through things like ETFs. That brings more money and hopefully more stability into the market. Over time, that small, volatile pond might just start to grow into a much more stable ocean. But that leaves us with the final, big, critical question. Even as all this new money comes in, those early whales still hold a massive, concentrated amount of Bitcoin. They still have the power to create those huge waves whenever they want. So, will they ever willingly give up that control and just let the market mature? That really is the billion-dollar question that's going to define Bitcoin's future.